Hi, everyone. Welcome to Ripple's Q1 All Hands. This is obviously a first in doing it all virtually, but I will start off by saying, as almost a reminder, uh, you all are truly our priority above all else. Your health, your safety, it's been, I think, something that we've tried to take very seriously here. And I really have been inspired by the team and what I have seen happening and really just living the Ripple values. I'm extremely appreciative for this team and all the kind of productivity I have seen and the kind of positive energy and the helping each other out. So with that kind of intro, I will say, Q1 definitely surprised us. It surprised me. I don't think we ever could have imagined the impact on our personal lives. But I also want to spend some time today talking about what it means for our industry, what it means for Ripple, and even kind of the macroeconomic outlook. It's unbelievable to me if you go back in time to the global financial crisis, sometimes called the GFC. Unemployment filings over 18 months of what is considered that recession totaled 15 million unemployment filings. We've been, in this pandemic experience, and there's been 30 million in 6 to 8 weeks versus 18 months or 15 million. 30 million unemployment filings. That's just in the US. And so I, by no means, am trying to be the Grim Reaper and describing, what I think all of us are feeling. But I do think there's some examples where it's going to get worse before it gets better. If you look at the unemployment filings, and the government obviously is trying to react aggressively to address that. Here's a headline from a couple of weeks ago. I think the government stimulus now stands at about $3 trillion here in the United States alone. I expect it's going to continue to grow. And I think that, while probably necessary to prevent an even more significant macroeconomic calamity, it definitely is going to have an impact on the future. And I think will, I believe, result in the debasement of fiat currencies. And you are seeing that in some emerging markets already where the exchange rates have started to shift. But even here in the United States, it's a real factor. One visualization of this, and in history, looking back, is on the next slide, is something we saw happen in the Weimar Republic, which was what we now call Germany after World War I, where they printed money to, frankly, fund the war effort, and that resulted in massive inflation after World War I. In 1923, people literally, as this visual shows you, were carrying wheelbarrows full of printed Deutschmarks in order to buy a loaf of bread. I'm not that bleak of an outlook about the US dollar, but I do believe it would be disingenuous not to acknowledge that what's happening here right now will certainly have an impact over the coming years. And, we won't see it just kind of go away quickly, because the things we're doing now will have second and third order effects. So, what does this mean for Ripple? What does this mean for us? Look, in some ways, I'm very optimistic that we're going to be able to weather this storm very successfully. We are being very focused on how do we make the right decisions for Ripple. And some of the decisions I will share with you today is, for example, we're going to be much more thoughtful about hiring. We are continuing to hire. I think even in the last few weeks, we've added 10 or 15 people. But our forecast for the end of the year, we've gone from expecting about 575 employees to expecting to end the year about 515, which is still adding about 60 positions between now and the end of the year. So keep that in mind. One of the things I will also talk about kind of as we get things started is, as I was talking about the kind of debasement of currencies, when we saw in the global financial crisis, kind of 2008, 2010, depending on what time scale you want to use, you saw a lot of new deficit spending and inflationary dynamics. And that was very positive for gold. As you see in this chart, gold was up about 100% over the years after the global financial crisis. And I think you're going to see crypto play a role like digital gold. And there's some data to support that as well. So the next slide talks about some specific examples that where crypto as digital gold is kind of gaining momentum. It's also important to remember that Bitcoin was born in the wake of that global financial crisis of 2008, 2009. Gold has been a safe haven asset in lots of ways. It did drop during the beginning of the 2008 liquidity crisis, but then you saw it make a big run. And I think we're going to see a similar trajectory and similar opportunity around the crypto market overall. I think you're going to see kind of a basket of cryptos, which I also think creates a de-risk situation. On the next slide, this is kind of already started to play out. The S&P 500 year to date is down about 10%. Gold is up about 12%. The total crypto market is up more than 25%. You're seeing Bitcoin has led that rally, but I also think you're going to continue to see dynamics which are good for, as you've heard me say before, if it's good for crypto, it's good for Ripple. On the next slide here, we are going to continue to focus on how do we use XRP as a really effective tool for payments. In this slide, we're comparing XRP's performance, scalability, and energy consumption to Bitcoin. And one of the things I think we will hear more about in 2020 is the sustainability. XRP really has been the greenest of digital assets. It's just shocking to me that we haven't heard more attention around the impact of the energy consumption of Bitcoin and Ether. There's some news earlier this year talking about one Bitcoin transaction is the equivalent of almost 1 month's energy consumption of a U.S. household. By comparison, the energy consumption used for XRP transactions is negligible. We clearly are seeing the lockdown, the kind of shelter-in-place dynamics have a big impact on cash-first remittance companies. So if you're unable to go to a physical store, then obviously you should expect that to go down. But we've also seen significant increases in digital-first players. I think various public companies have shared decreases of 30 to 40% in their cash-centric business, but we've seen increases of 80 to 100% in those that are kind of digital-first. And that obviously has been very good. Now, I'll be clear. I don't think cash services are going to go away tomorrow. I think we're going to see them diversify, and more will happen digitally. And I generally think that's good for us. I think you're seeing central banks more than ever thinking about how digital assets could be used. That also is, I think, good for us as we work with some of the central banks around the world. On the next slide, it's worth spending a minute in understanding how I think that you're going to see another wave of correspondent banks de-risking. So internally, I think everyone understands well, one of the key things that we are solving through on-demand liquidity is the mitigating the need to pre-fund and for correspondent banks to be able to facilitate payments without some of that pre-funding. We saw in 2008, there really was a first wave of correspondent banks changing they limited access to money transmitters and remittance providers, resulted in slower, more expensive payments in some of the traditional networks. But it definitely sparked a big boom in digital remittances. And I think what we will see happen now is banks are going to reassess the cost of being in some of these markets where the overhead, both in terms of cost of capital, but also the overhead in terms of compliance costs. And I think they'll reassess that and decide what they want to change. Remittances are relatively small volumes for some of the biggest correspondent banks. And I think we're going to see another wave of that de-risking, which again, as I said, I think is opportunity for Ripple. One manifestation of that is that I think it has helped the product market fit of some of our core products. So we have always had the tip of our spear target customers that are digital first. I think the value proposition of on-demand liquidity, as I was just describing, or as we call it, ODL, only increases. This is a quote from one of our current customers, describing ODL as a lifeline, given their own liquidity dynamics. The other thing that's been interesting to watch as we went through some of the volatility over the last handful of weeks is you saw in mid-March some really dramatic volatility in the Philippine peso, where actually some of our customers, the only way they were able to get liquidity into and out of the Philippines was through ODL. We certainly did have strong momentum as we kind of finished up Q1. Just to give you a couple data points, we saw about an 85% increase in volume across RippleNet between Q4 and Q1. That's obviously really, really good, despite kind of ending March with a slowdown in growth. Specific to our on-demand liquidity, there was a 190% increase from Q4 to Q1. So we saw some of our big customers, a player in Thailand, go live. It's driving a lot of volume. We had forecasted 20 new contracts. We ended up signing 28 new production contracts in the quarter. And so despite the dynamics of the pandemic, we were able to finish the quarter on a strong note. It's certainly not lost upon me that, and I don't think, frankly, many people in the crypto community, that the majority of the Bitcoin mining power is in China. And particularly when we see the dynamics going on in the COVID world we're living in, those dynamics are only going to get more accentuated, I think, during the balance of 2020. And I think it's important for really the globe to understand that Bitcoin mining power today is controlled in China, and what are the implications of that as we look at many governments around the world taking a very strong stance about Huawei and the build out of 5G mobile networks. So it'll be interesting to see how that plays out. I do think a priority for us throughout Q2 and really the balance of 2020 will be to continue to push to get more clarity, frankly, not just for XRP and all of the participants in the XRP ecosystem, but really for crypto more broadly. Moving to the next slide, look, there's no question that a lot of uncertainty remains. And I think this downturn will separate the wheat from the chaff. This is an expression from my roots, having grown up in Kansas. Our top priority will continue to be all of you, to make sure that we do whatever we can to make sure people are safe. But it's also to press our advantage. I use the word prudently here because we're in a really strong position from a balance sheet point of view. We're in a strong position in terms of customer momentum, activity on the network. And so really, really pleased to see what's going on both at Ripple and frankly across all the different activity in the XRP ecosystem. And then finally, we have been, I think, successful because we have been very focused on our key priorities, and that has served us well. And I want to make sure we continue to do that. Last slide, just to wrap up here. Look, our biggest priority really is you all. I have been really, it's been an honor to be the CEO of this company in this crazy time, because you all have certainly risen to the occasion and lived so many of our values represented by Legos. I think in a global distributed team, we are very fortunate to have those strong kind of cultural kind of stakes in the ground and to continue to build and preserve that. But I can't wait to get back to the office and see you all in person and continue to build the company and build the internet of value. I don't think this is the 2020 that any of us asked for or certainly expected, but I could not be more proud of this team and the momentum we've continued to build as we executed in Q1.